Good evening, everyone, and welcome. This was not the way anyone really wanted to end the week. After a generally positive earnings season so far, traders pull back hard today after big names like Ford Motors, Visa, and Amazon.com released earnings or outlooks that sent investors heading to the exits. Also adding to the sell-off mood, the simmering strife between Russia and the Ukraine as the U.S. warned of even tougher sanctions against Russia. Meanwhile, S&P downgraded Russia's credit rating to one notch above junk status. Stocks were able to bounce off the lows of the session, but the final numbers were not pretty and were enough to wipe out all of this week's prior gains. The Dow tumbled 140 points, the Nasdaq was down 72, a nearly 2% drop, and the S&P 500 lost 15. Dominic Chu now with a closer look at how all the saber rattling out of Russia is impacting markets here and around the globe, and what else is giving traders the jitters right now.
Stock markets around the world again came to the realization that geopolitical risks matter. Many traders point to what's happening in Ukraine and Russia as being a big driver behind Friday's sell-off. And even though Ukraine is thousands of miles away and has little to do with the U.S. economy, it still matters. Armed conflict anywhere around the world has a way of sending investors to the sidelines.
I worry about if Russia spills over to Europe, and Europe happens to be the second largest global economy in the world. So if the tension there starts to contagion effect into Europe, that's going to affect the U.S. companies that sell their goods and services there, and I think it's reason to be concerned, and we're watching it very, very closely.
But worries about escalating tensions between Ukraine and Russia are only part of the story. Another big driver for the stock market is still coming via earnings season. Just about half of the companies in the S&P 500 have reported their numbers, and the results have been generally positive. Over 2/3 of those companies have beaten Wall Street expectations. Remember, though, that those expectations had already been set very low this time around. It'll be another big week for earnings next week. Among the companies slated to report, social networking company Twitter, drug maker Merck, as well as oil and gas giant ExxonMobil. And a lot of experts still say that company fundamentals like earnings and sales still matter.
We're paying attention not just to the earnings that are being reported because there can be a lot of one-time issues that go into that, but also what the guidance is looking like, what the companies are saying about their underlying business. So if we can find companies that are reporting good numbers yet are still have good expectations for the rest of the year, that's a positive, and we want to focus on those areas.
Beyond just this next week, you'll still have companies like Disney, Whole Foods, and Tesla that will report later on in the season, as well as many of the major retail companies like Macy's and Walmart. So, it's too early to just sit back and relax just yet. Investors are keeping a close eye on global developments and, of course, that earnings picture. For Nightly Business Report, I'm Dominic Chu.